Greetings, fellow colleagues. We have been approached by our client, Gong Stationers, and I have brought you guys together so that we can look into their books. Today, I'm here to delegate tasks. Unati, as the head accountant, I'd like for you to deal with the CPJ CRJ. Could you please deal with the debtors and creditors? And could you please deal with the bank reconciliation? Anyone have any questions?
No, ma'am.
We can begin.
Prime Luma's accountants explaining MG Gong's books.
As agreed in our initial meeting, I will be taking you through the cash receipts journal and also the cash payments journal. So as we know, the cash receipts journal basically records every transaction that has happened that we have basically received from our customers. Basically everything that we've received from the consumers, and the cash payments journal records everything that Gong has basically paid to either their clients or their suppliers, right? As I've said, this is our cash receipts journal, and what we have here in the first column is our dates, so the different dates in which the transactions went through, and we have details which gives you like a list of items of the transactions that have happened. And then we have the reference of the receipts themselves. We have bank, so bank represents the transactions that happened through the bank, and then we split it up further where you get to see debtors. So this records the list of people who have paid money to us. So these are our debtors. And then you have the discount column, and then you have sales, and then you also have cost of sales. And then this is just like a further breakdown of the other items that we have not accounted for in the previous columns, which is the amount the amount of money that was paid through the Gong account. So the first one, bank, so 57,000 Rand came from Capital. So that's the amount of money that they've deposited into the bank in order to start the company. So then 2,000 Rand came from DSG, of their consumers, and then St. Andrews and also Nzika, right? So the reason why we have 2,090 here is because we gave them a discount because they paid their full amount. So what St. Andrews and Nzika did is that they have not paid the full amount, but they've paid a portion of their debt to us, right? And then cash sales, so this is the amount of money that we've received from selling the stationery to customers, and it amounts to 6,275 Rand. And then at the bottom you have interest received from bank, so that amounts to 250,000. So when you add up all of this, so the sum of this entire column is 71,525. So basically you add everything that's on this column, so 57,000, 2,000, 2,000, 4,000, 6,275, 250 amounts to this total amount. This is supposed to be total at the bottom of this table. And then the second one is debtors. So this is the amount of money that the people who owe us have paid. So that amounts to 8,090 Rands. And so this is the discount that they received. So you'll see that we've gone minus. And the reason why we've indicated that it's a minus is because we've given them a discount because they paid us early and they paid the full amount. So hence it's only recorded as 2,000 Rand at the bank, because that's the amount of money that they actually sent to the Gong account. And then 6,275, so that's the amount of cash sales. So this is the amount of money that we received from consumers because we were selling them stationery. And then the 3,890 is the cost of sales. So typically the cost of sales would be lower than the cash sales, and the reason why is so that Gong can make profits. As you can see, the cost of sales is lower than the cash sales because they're selling everything at a higher price than what they've actually bought it for. And then 57,000 rand, 250 rands for interest income. So sorry, for interest received from the bank. So this is the amount of money that we've incurred due to keeping our money at a certain bank. So the total amount for that particular column is 57,250 rands. So that's our cash receipts journal. And then coming to cash payments. So as you can see, similar to the cash receipts journal, we have cash payments, we have the date, we have the items, we've detailed them. And then, so the date, you'll find that on both journals, the dates are like in a chronological order because appropriate setup for a journal. And then, so here you have paid telephone expense, paid creditor part payment, paid creditor, paid bank charges. So your paid creditors are the people that we owe. So it's the amount of money that we've sent to people that we owe. Right, so paid telephone expense, 1,500 rands, paid creditor, 5,000 rands, paid creditor part payment, 2,000 rands, and then we have bank charges that we have to pay to the bank for keeping our money in the bank, and also making transactions. So as I said, we also further broke it down. So, but the total amount of this particular column, so these speak to the bank transactions that have happened, it's 9,150. Then when you break it down further, you have your creditors. So these are the people that we paid money to, the people that we owe, and we paid them an amount of 5,000 rand, and then also another amount of 2,000 rand. So that's amounts to 7,000 rand. And then again, so we have telephone expense. So this would actually fall under operational costs because this is a cost that we have almost every month because we use a telephone. And then bank charges, they probably vary from month to month based off like the kinds of transactions that we've done and the amount of transactions that we've done via the bank. For this month, it currently sits at 650 rands. The total amount for this part for the bank column is 9,150, and then when you break it down further, 7,000 for creditors and 2,150. When you add these two blocks together, they should amount to the grand total, which is 9,150. So that is my part. Thank you very much, and I will hand over to Abongi.
Hey everyone, my name is Abongi Bambiso, an accountant for Prime Luma Audit Group. In front of you, I have the creditors journal and the debtors journal for Magong Stationaries. I'll start with the creditors journal. So the creditors journal is when we receive stock from suppliers on credit, meaning that we owe them money, right? And the debtors journal is when we give stock to our customers on credit, meaning that they owe us money. When you look at this, on the first row is the dates of which everything occurred. Next to it is the details of what transaction occurred. So on our creditors journal, we have all of the suppliers that have given us stock on credit. On the 3rd of August, we bought stock from Macro for 4,540 rand. On the 7th of August, Magong bought stock from Papermate for 3,790. On the 10th of August, stock from Stadler was bought for 5,320. And we also bought stock from Big for 2,310. Now all of these will be put on the stock row and the total cost will be 15,960 rand. And the second part of this will be the debtors journal for Magong Stationaries. And the last of our transactions on credit was to St. Andrews. We gave to St. Andrews 2,745 rand worth of stationery, but it cost Magong 1,528 rand. Now, you'll calculate both rows to reach your total. The total for sales was 9,525, while the total for cost was 5,730, meaning that there was a profit of 3,795.
Hello, I am Lutando and I will be talking about the bank reconciliation statement. So in our books, right, well, for the company that we're working for, they have their own general ledger, but as much as we have our own general ledger, which speaks about the bank account, we also have the bank statement. So at times, the bank statement and the total and the bank general ledger account, they don't align because maybe timing differences, errors, or omissions. So basically, the bank reconciliation statement ensures that the totals align and they are the same. So here, we have the balance as per the bank statement. So the bank statement says that the balance is 58,100, right? But the general ledger says it's 62,375 rand. So what we have to do is basically figure out what transactions weren't accounted for and what were accounted for. So we either plus something or we minus something. Here we have 6,275 rand. We are adding it. These are the cash sales that we made but weren't put into the bank statement, right? So yeah, those are the cash sales that we made, and then for less, we're gonna subtract 2,000 rand. These are our BIC is a supplier for the company. So basically, we have to subtract that because we paid part of our payment to our creditor. So first, we're gonna get the 58,100 plus the 6,275, subtract the 2,000 to get 62,375. This is what is according to our general ledger, our bank balance. So now this is what we are doing to align the general ledger and the bank statement. Thank you.
This is the general ledger for Mekong Stationers, and the general ledger basically records the total receipts and the total payments of the company. So as we see here, the total receipts for Mekong were 71,525, and the total payments were 9,150. So when we take these two sums and we subtract them, we get a total of 62,375. So we do this to work out the total amount that is going to be carried forward to the following month. So that's why we have a balance brought forward, and this balance is the amount that we start with at the beginning of the following month.